Hi friends, welcome back to Murthy Finance Academy. Today, the third company which we are going to discuss from the fast fashion retail space is none other than Aditya Birla Fashion and Retail Limited. So before we proceed, a quick disclaimer, I'm not a SEBI registered analyst. So whatever the companies we are going to discuss are purely for educational purpose. Now let us start. So Aditya Birla Fashion and Retail Limited is currently executing a deliberate and complex pivot, evolving from a traditional pure play apparel retailer into India's most diversified fashion platform. This transition is the defining investment theme for the stock. By spanning the entire consumption pyramid from value centric formats like Pantaloons to ultra luxury destinations like Galeries Lafayette, ABFRL is attempting to build a portfolio capable of weathering segment specific volatility. The strategic focus has moved decisively from a raw scale to profitable scaling, prioritizing margin expansion in high growth segments like ethnic and luxury over immediate top line dominance in mass categories. The company's some key brands are include Pantaloons, owned and ethnic brands like Sabyasachi, Taswa, TCNS, W, Aurelia, and Tarun Tahilyani's ethnic portfolio. And in coming to luxury retail, the Collective, Galeries, Lafayette, Mono brands are some of the key brands under operates under this company. And the company is also operating digital first TMRW tomorrow and house of D2C brands like Wrong, Back. So these are all some key brands company is operating. So Aditya Birla Fashion most competitive, comprehensive ethnic portfolio spreads represents its strongest competitive mode by controlling high margin designer led brands like Sabyasachi, Shantanu, Nikhil, alongside scalable premium labels like Taswa and mass premium turnarounds like TCNS. The company has cross price point coverage for the lucrative wedding and occasion wear market. This vertical depth is not merely about scale, it creates a defensive hedge as seen in the ethnic segment's 22.7% EBITDA margins this quarter, which offsets the volatility inherent in the mass market apparel trade. As the company refines this portfolio, it must navigate a complex macroeconomic landscape that is currently sending mixed signals to the retail sector. So the Q3 fiscal year 2026 macro environment was defined by a sharp dichotomy. While general consumer footfalls remained weaker than expected in daily wear categories, the robust wedding-led demand acted as a vital stabilizer for occasion wear and premium segments. This trend favored the Aditya Birla Fashion's heavy tilt toward ethnic and luxury categories, but created headwinds for its volume-driven value formats. So the festive and EOSS shifts reopened the growth for the quarter with 8% was artificially suppressed by true critical timing nuances. Fun, festival calendar shift. A portion of the festive season, Pujo, shifted to Q2 this year versus Q3 last year. This created a high base effect that particularly weighed on growth in East and North India. And EOSS postponement. Management consciously delayed the end of season sale by 12 days in the Pantaloons format, pushing the high volume liquidation event into Q4. So these shifts mean that reported figures understate the underlying consumption health. When adjusted for these timing nuances, the Pantaloons format delivered a 3% like to like growth, suggesting steady underlying demand despite the macro softness. However, the EOSS delay introduces a strategic risk for Q4. Management must now achieve full inventory clearance without further diluting margins. The market continues to see occasion wear outperforming daily wear, accelerating a shift toward alternate distribution channels. The emergence of quick commerce and omni-channel integration is gaining traction as retailers seek to recapture footfalls that have migrated away from traditional high street formats. For granular these market forces, while challenging, manifested in sharply diverging results across Aditya Birla Fashion's specific business segments. And the valuation of Aditya Birla Fashion is increasingly a sum of the parts story, SOTP. The divergence in segment wise contribution, where loss making digital formats sit alongside highly profitable designer brands, is critical for any fundamental assessment. So, Pantaloon segment reported a 2% revenue dip to 1276 crores, but this includes a significant network connection of 20 plus store closure over the past 12 months. The 3% adjusted LTL growth suggests that the remaining core is healthy. The new premium retail identity is targeted at the fashion-forward women's western wear segment to drive higher ticket sizes. The Ethnic's portfolio is a clear outperformer with 20% growth and an annual run rate of nearly 2,200 crores. Sabyasachi hit a major milestone, delivering its first ever 200 crore plus quarter, which is 44% growth with strong double-digit profitability. Thus, its premium ethnic wear grew by 26%, while TCNS showed 8% LTL growth despite store rationalization. Brands like TMRW and Luxury. TMRW grew 29%, while Luxury grew 27%. The November 2025 launch of Galeries Lafayette in Mumbai establishes a high-tier luxury anchor, while TMRW focuses on tech-led marketing and fulfillment efficiencies. So, while the total footprint expanded to 7.7 million square feet, the reduction in Pantaloons store count from 417 to 406 reflects a pivot toward quality of space over quantity. This operational performance across segments provides the essential context for understanding the underlying health of the group's financials. Aditya Birla Fashion EBITDA's margins expansion is currently a more critical indicator of a potential re-rating than top-line growth. It validates that the high-growth capex era is yielding to a harvest phase. So while EBITDA grew 13%, the EBIT fell from 31 crores to 20 crores. This is a direct result of higher depreciation, which is the accounting price paid for 5.5 lakh square feet of area added in the last 12 months. Earnings quality remains high on operating level, but the bottom line is pressured by aggressive footprint expansion. And the reported profit before tax of 141 crore includes a 28 crores exceptional item related to the new labor code. On a normalized basis, the loss of 115 crores is more reflective of the core operational trajectory. So, overall, Aditya Birla Fashions is in the J curve of its investment cycle. While the consolidated bottom line shows a loss, the group, excluding TMRW, hit a major milestone, positive EBITDA on a pre-IND accounting standard basis year to date. With gross cash of nearly 2,100 crores, the company has the liquidity to see its new stores reach maturity. While the financial statements highlight the cost of growth, a look at specific operational metrics reveals the progress made on efficiency and turnaround. So, coming to some key KPIs, operational wins this quarter validate management's claim that they are on a long-term growth trajectory. It's ethnic LTL growth of 10%, outperforming the broader apparel market, with Tasva achieving a 20% year-to-date LTL. And TCNS turnaround progress achieved a 500 basis points margin expansion and streamlined the network from 650 to 480 stores. This focuses the brand on a profitable occasion wear core. And e-commerce momentum, it sustained a more than 15% year-on-year growth driven by omni-channel integration. And the company also added 2.5 lakh square feet sequentially in Q3, demonstrating that expansion remains aggressive despite macro softness. These operational benchmarks form the core of the recent analyst discussion, providing a window into management's forward-looking strategy. The vibe of the Q3 fiscal 2026 call was one of disciplined defense. Management was candid about the 8% growth, but stayed aggressive on the margin story. So, the company claims that TMRW losses have peaked, is backed by the data science-led capabilities used for faster fulfillment and marketing efficiency. This 900 basis points margin improvement is a more critical metric for analysts than the 29% revenue growth, as it signals a clear path to break even. And management is delivering on variables within their control, store rationalization and cost efficiency. The peaked losses claim in TMRW holds water, though the sustained growth in Pantaloons remains highly dependent on a broader consumption recovery. The interplay between management's strategic execution and the current results ultimately dictates how the market should value this evolving entity. And coming to its valuations, the company remains complex because the consolidated entities losses mask the high value segments within. So here we need to look at the SOTP type of valuation. So Aditya Birla warrants a higher valuation as it sheds losses. The designer-led business, Sabyasachi, etc., grew 44% this quarter with strong double-digit profitability, justifying a luxury retail multiple. As TMRW moves towards break-even and ethnic margins sustain greater than 20%, the sum of the parts value should eventually re-rate the stock. So the current share price does not fully reflect the value of ethnic and luxury businesses. Investors are essentially getting the high growth segments at a discount because they are still being dragged by the slow recovery in pantaloons. While the valuation reflects a pivot to profitability, several external and internal risks remain that could derail the trajectory. And some key red flags and risks which we need to watch are consumption softness. If the mixed demand environment becomes a permanent slowdown in the lower tier markets, the pantaloons recovery could be pushed to late fiscal year 2027. And its phase 2 execution risk. TCNS is through phase 1 rationalization. Phase 2 of aggressive growth carries risks in an increasingly crowded mass premium ethnic market. Leverage and depreciations. The price of growth of 350 crores in quarterly depreciation. This will continue to weigh on PAT until the 5.5 lakh square feet of new space reaches optimal maturity. At inventory and end of season sales trap, the 12-day postponement of the EOSS means any Q4 footfall underperformance could lead to an inventory pileup and significant margin dilution. So a clear understanding of these risks allows for a more balanced assessment of the company's internal strengths and external opportunities. Coming to SWOT analysis, the company's key strengths are 22.7% EBITDA margins in ethnic segment, Sabyasachi's 200 crore plus revenue quarter, and gross cash of 2,100 crores are key strengths. Coming to weaknesses, stagnant pantaloons revenue, EBIT drop due to depreciation, and statutory impacts like labor code on profit and loss are some key weaknesses. Opportunities are Galeries Lafayette scaling as luxury anchor, 900 basis points margin improvement in TMRW brand, and quick commerce traction for daily wear are at some key opportunities. Threats are Pujo style festive shifts causing volatility, prolonged softness in discretionary spending, and execution risks in TACNS phase 2 expansion could be a threat for this company. So some key monitorables which we need to watch are its inventory clearance, full liquidation of seasonal stock in Q4 without further margin dilution, and ethnic margin floor, sustaining 22% plus EBITDA margins in the ethnic segment for the third consecutive quarter. TCNS milestone, achieving a double-digit pre-IND accounting standards margin within the next 2 quarters, and TMRW break-even, continued narrowing of losses at the current 900 basis points year-on-year pace, and Galeries Lafayette traction, incremental footfall and basket value growth at the Mumbai flagship. And the last one is Pantaloons like-to-like growth, sustaining the 3% adjusted LTL growth in a non-festive Q4 environment are the key things to be monitored. So, as a final word, fiscal year 2026 is a transition area with visible margin green shoots and the designer-led portfolio hitting record milestones. Aditya Birla Fashion is a coiled spring awaiting a broader demand recovery. Maintain selective exposure focused on the SOTP pivot. If you like this video, please do like, share, and comment and subscribe to Murthy Finance Academy. Thank you.